What's good, everybody? Today is August 20th. We're about to run through the entire price action from the day. We're going to look at this super early morning clean short right at 9:30, and especially we're going to look at why I didn't take it and what I'm taking away from that moving forward. So without further ado, let's just hop straight into the education. All right, so let's go over some charts and start with some top down, right? So zooming out, we have to understand that right around Monday or somewhere around last week, right, we swept this high, and then ever since we've been working our way back into the range. So ever since that point, NQ has been leading much more bearish, looking much heavier, displacing much further back in the range, while ES is just starting to slowly push back in the range, rebouncing to equilibrium, what it looks like. Then we're potentially putting in SMT to have this start manipulation lower and then displace higher like that, right? So looking at this, right, opening the day on ES, we opened right about here, right? So we had not yet tapped into equilibrium of the range. That became, if the day wanted to be bearish, that became a bearish draw for the day, right? So potentially we are looking for shorts until equilibrium, and until that point, once we hit that point, then we can start to slow down and maybe reevaluate a bias, right? So until we hit equilibrium, we're looking for shorts, right? So now looking at open, right, on ES and on NQ, we have this super clean setup playing out right here. The only fair value gap in this leg on, actually it's a second, on ES over here, right, and I think it's maybe one of the only ones on NQ too. The only fair value gap in this leg right here, if we look, pull that thing over, we tap right into it and we're positioning ourselves inside on open, and once we get into that fair value gap, we started countering resistance and kind of consolidating, right? So what is that consolidation inside that fair value gap? That's AMD, right? That's setting up for a accumulation. Then we can see manipulation on open and distribution to the downside, right? Which is exactly what we end up seeing. So if we look, when we tap into this, we literally start accumulating right here. This is a super clean AMD model, right? So accumulation right here, puts 7 AM, puts in this high, and then once we open the market, we see an SMT already put in, right? So this tells us, okay, we have manipulation on AMD. I'm just going to now react and see if the market wants to give us another manipulation, or if we can look to, you know, what is open going to give us, right? So I'm not going to just hop in a premature short right around 8:55 before market open, because I'm expecting with this AMD model to just accumulate until we see that manipulation come from that injection of volatility at open, especially on a day like this where there's really relatively light news and we're just expecting to see what the market wants to do, right? So looking back, right, we have this super clean buy side of the curve, right? Complete generated liquidity. There's no big obstacles in our way. The same exact thing is looking to happen on NQ, right? Now zooming out, we're in a super clean bearish trend, right? We've been literally dumping every single day we open the market and dump, right? What makes us think that today's going to be any different? We can't just predict it and take a short on open, but we have to react to it and come in with that expectation that if I had a gun in my head bias today, it would be bearish, right? So now looking lower, we see that AMD model start, right? And with that injection of volatility, market opens and it manipulates this high. So we have an SMT get put in on this high. So draw that out right about here, SMT. And if we look over here on NQ, nothing, this high does not get taken in, right? And then from there on, this is why I didn't take this trade, right? We see displacement through, change of the state, looks literally beautiful. Fair value gap opened up in the leg, new fair value gap open. Everything looks great to literally like spam short, right? Stand short right here, stop at the high and go for the low, right? A nice little 2.4 or 2.4R, and then if we want to leave fib retracement, if we want to check out some standard deviation, we can maybe catch 3.5. And I mean, look, if you wanted to hold for runners until equilibrium, holy bread, right? But that's only if you're super confident with that. And so why did we not end up taking this trade? What told me, no, don't hop in this trade? And I'll tell you guys right now, it's because of the time, right? On open, typically on open, what we see is this, right? We see 9:30 open, so we see 9:30 open, and then we see a little bit of manipulation. So exactly at this point where we saw manipulation at the high, we're expecting to see a dump, but I want to react to, right? I want to react, and usually we'll see something like this where we see accumulation, we see more consolidation, right? And then we see a final manipulation to go ahead and push price lower, like this, right? This is what I'm expecting. So I don't want to hop in a super premature short right on open and then go ahead and get stopped out early before taking my trade, especially when we trade one trade a day, because we want to limit our risk and we want to give ourselves peace because we know exactly what we're looking for, when we're looking for it, all of the above, right? So when we trade that one trade a day system, I don't want to be sitting on the charts all day looking for a trade. So I'm literally saying, where's my best entry, my one-time entry where I can press it, be confident about it, and just forget about it. Even win or lose, I'm fine with taking it, right? So I'm not 100% stoked because 9:30, check this out. 9:30 candle, the first market open candle makes that change in the state, right? So we see change in the state happen at 9:30. For me, that could be more manipulation than it could be actual displacement. So I'm not sure if the market wants to go ahead and manipulate, do this, do that. I'm not sure, right? I'm just simply watching. And it didn't catch me enough and make me believe enough in that move to go ahead and spam short. Now, looking back, should I have taken a short? Yes. Because why? Because in my rule system, I need to wait for first fair value gap to get opened on both indexes before I confirm that that open manipulation chop session is over, right? So once I see first fair value gap get open, first presented fair value gap, let's mark that out right here. With a little bit of pretty green, right? We're going to pull this out right here. So first presented gets put in right here. Once first presented fair value gap gets opened up, it gives us a good idea of direction. If you look here on ES, it's opened up, but it's just super small, so I'm not going to mark it. However, it's aligned with the narrative and it gives you that super great understanding of price direction, right? So if you are understanding this, right, once I see first presented, it tells me that that morning chop is over. So first presented gets tapped or gets opened up, then I can place my position, get tapped, and go for a super efficient move, right? Looking back, that is what I should have done. If you didn't see this trade on open, there's no problem. It's just simply that you have to be able to recognize the model when it comes and not be scared by anything else, right? The other thing I wanted to look at is how on open we made a bit of a SMT, where if we look over here, this first move down to about, what candle was this? This was the 933 candle. The 933 candle on NQ went ahead and took this low over here, where right here, we're on ES, we didn't take it and we made equal lows. In my opinion, if you were scared off by that and didn't want to take a short just because that small SMT and that bounce, you are not looking at narrative, right? Because we're looking for what gets displaced through what gets swept, right? So when you see something get swept and you don't want to see that counter trend resistance, we want to trade short, we don't want to see some kind of bounce to the upside, right? From a sweep, we understand that that is going to be an enemy to our trade, right? So it's on us to understand that what is going to invalidate our trade, right? I'm not expecting a small little SMT, one tick SMT in a sweep of a random irrelevant 1 minute low to go ahead and invalidate my trade to go push me higher and then remake my entry model and go short, right? If narrative tells me now is the time to go, we have price aligned, been generating liquidity overnight, we have time aligned where 930 opens, manipulates, goes, that's exactly what we're looking for. That's the trade we want to take. So I don't think that SMT should have scared you off. If it did, just go over the day, relook at, what you thought, what your emotions were, why you didn't hop into the trade. For me, it was simply just wanting to avoid a trade right at 9:30. Like, I saw this playing out, but I just wanted to avoid it because it was so early in the day. And I don't think that's necessarily a bad habit. It's more just a risk management thing that I've developed and seen in my own trading over a while. So if you do the same, no problem, nothing at all. Just simply go over and say, was it the right decision to make? If it is, go ahead, keep doing it. The next thing I want to look at is this potential long that you could have took later in the day. And I was watching this, but I didn't think it had the best entry, and because of that, I was just looking at kind of getting off the charts for the day. So right around 11:10, I usually like to get off for the day, and this trade was within that time, so I don't think this was bad if I did decide to enter. However, let's look at how this setup kind of presented itself, where you could have entered, all that good stuff, right? So zooming back out, like we said, we are in a bigger time frame bullish trend, right? And by bigger time frame, I mean like bigger time frame, like daily, right? So zoom into the daily. If you look right here, we are still within a very bearish leg, right? Or sorry, a very bullish leg, right? So we're rebounding to equilibrium this leg, rebounding to whatever the market wants to seek as the most efficient zone before pushing back to the upside, right? The fundamentals say we're going to the upside. Technicals show we've broken out of the range with displacement. We're looking like we want to go back to the upside. And we have to recognize that as traders and be like, okay, we are expecting 1 hour bearish order flow. We're expecting bearish order flow until we hit that bigger time frame level, right? So for me, that bigger time frame level, the first one in which I expected to see bullish price action to the upside is once we hit equilibrium in this bigger range. I'm expecting to see a little bit of a bounce, enough to give me a 1 minute trade once we hit the bigger time frame daily equilibrium, right? Daily equilibrium is guaranteed to give you pretty much a little bit of a bounce if it is aligned with narrative, right? And that little bit of a bounce is what we can use as scalpers and 1 minute traders to be able to go ahead and frame and take a trade, right? We don't need to have the perfect daily fair value gap aligned right here to go ahead and take a trade all the way up to these highs, because we don't trade 15-minute higher time frame, all that kind of stuff, right? I just need a small little 1 minute move, right? So once I see that 0.5 get put in, I'm waiting to see my entry model generate liquidity, turn around, all that good stuff, right? So looking at this, we ended up seeing a push lower, generating liquidity until we randomly just kind of sluggishly took off right around 10:50 to 11:10 macro. So marking out 10:50 to 11:10, 10:50 to 11:10 macro. Right here is where we see price start to act efficient. And I'm going to pull over ES because that's the only one we're really watching for this trade, because it actually hit the bigger time frame equilibrium. So looking right at this right now, once we tapped into 10:50 macro, if we look, we do our final manipulation right here, then we go ahead and start displacing higher. So 1050, I mean, macros work, bro. There's nothing you can really say against them. And if we look, this has all been generating liquidity, and let's zoom out time frame and look where the imbalances lie, right? Because think about this. If the market is continuing a bearish trend, bearish trend, every time it pulls back higher into a fair value gap on a much lower time frame, we're going to be seeing our entry model, right? So we're going to be seeing our high get broken, displacement, and tap entry, right? And that little move could just simply be a small rebalance to then go ahead and stop us out, right? So we want to be understanding where, if the market is going to do exactly this, where it's going to rebalance and then push lower, I want to be understanding where can I target in that 1 minute long trade right here that protects me against the possibility, because if the market is going to rebalance, where is it going to rebalance to? So I'm going to figure out, I'm going to look for equilibrium of this range, right? I'm going to look for the fair value gap in this leg, right? I'm going to look where on that 1 minute chart, zooming lower, where is all the actual generated liquidity hiding, right? So if we zoom to the 1 minute chart right here, where is the actual price action that's the generated liquidity? Where is it lying, right? If I see complete displacement down to here and then I start to see generated liquidity here, that tells me that the market's probably going to want to go back to the top of that generated liquidity, go ahead, run all of that, right? And then rebound to the fair value gap and then push lower, right? So we can align, I just aligned 3 things telling me where the market can potentially rebound to, right? That's the kind of stuff that we have to be doing if we want to be taking high probability trades. So let's zoom back out and let's go ahead and look. Looking right here, where are the fair value gaps in the leg? 5 minute time frame tells us what? We have fair value gaps tapped into all the way up to this big imbalance where we start to see a huge amount of imbalance price action left, right? Now 15 minute. 15 minute tells us no fair value gaps until this one, right? And in my opinion, this is what I liked. I like the 15 minute because on the 1 minute, that is where we saw the real generated liquidity end right about there. And then especially this too. If we draw equilibrium, dude, that is perfectly aligned. That is perfectly aligned, right? So equilibrium, fair value gap, perfectly aligned. And then finally on the 1 minute chart, like I said a second ago, we have generated liquidity all the way up until that point. So we have 3 things aligned. We have market liquidity, nothing that I'm drawing. We have literally the market leaving its own tracks telling me this is where I want to go run. Then finally we have that imbalance, and then also we have equilibrium of the range, right? That's nothing that I'm drawing. There's nothing there that I'm drawing. And then finally, let's see if we had this too. I didn't even check this. Did we have any kind of manipulation up to those highs? I mean, it's somewhat aligned, right? If we look, price comes up almost to 3.5 level and then goes ahead and starts pushing lower. 2 to 2.5 was pretty much there. I mean, it's okay if you want to draw that on, keep it, no problem, right? Where is the problem with this trade and why didn't I end up taking this, right? This looks really good. We have 3 things aligned beautifully, telling me there's high confidence for this trade. And if we look, it ends up playing out. But where would I have wanted to enter, right? Let's simplify this to a line chart, because y'all know my entry model. It's changing the state, inverse fair value gap. I want to see displacement, pull back to that change of the state, and then we go for a long, right? But the issue with this price action is that just zooming into this little area right here, where is our change of the state? Our change of the state is going to be right here, right? But if we pull over to NQ, we're going to see that the change in the state doesn't happen all the way up until this point, right? Or somewhere within the middle of this leg, right? So at that point, it tells me, is this first initial change of the state enough to where when I see that change of the state, it tells me, okay, we're ready to go? And to that, my answer would be no, because if we look right here, we had the same thing happen. We had manipulation right before 1050 macro. This looks like a clear manipulation. We had complete displacement through this, just barely getting above that candle. And then we go ahead and we stop that level out, right? Right here, we had the same exact thing where we went above, we made change to the state, and then we went ahead and stopped it out, right? So in my opinion, that tells me no. So I'm wanting to wait for more. What is the more that I can wait for? If we zoom out a time frame, we can find a fair value gap or a true change of the state on a little bit of a bigger time frame that clarifies and shows the time frame that the market or the model is actually on, right? But in my opinion, here's the most clear and easy way to understand this, right? Where is the true change in the state, or where is the true break of structure or change in market order flow? Do this. Simplify this to a line chart. What low on here what high on here do we need to see get broken above with displacement that will validate us to go ahead and take a long? Is it this one? I mean, that looks pretty good. Is it this one? We could maybe break that and then go push lower, because if we look right here, high got broken, we push lower. So in my opinion, it's going to be this high, right? Once I see this one get broken through with displacement, that looks pretty good to me to go ahead and take some kind of long. So now let's look for change in the state on that 1 minute high. So right here, change of the state happens here. So the candle that actually changes state is right here. Once that candle goes above, we see a small tap back in. And the way you would have had to do this is you couldn't wait for that extra candle like I usually like to do. I usually like to wait for that change of the state and then the second candle to come back. And then I like to see a bit more of less than just kind of like a quick like tap, like how this one barely tapped it and went. I like to see some kind of market do something like this where it kind of starts to slowly pull back, accumulate a little bit AMD on a super small time frame, and then start to push higher, right? That's usually what most of my trades end up being, so I like to wait for that second candle to pop up. But if you take that after straight the change of the state, I mean, you're breaded on this trade, right? This is really nice trade. Stop at the low. We have first take profit, could have been this high. I think this is a really nice conservative take profit. Then finally, honestly, I would have complete confidence in this level getting hit just because of the three things aligning. And if we look, once we do this, we completely just go, bro. Like, we hit this so quickly, so fast, so efficient, and then from here we rebound to equilibrium and then push higher. So in my opinion, this is really like exactly where the market wanted to go. We can figure that out by aligning the confluences. I think this trade, if you got in on this or this short in the morning, I think these were two super high quality opportunities. And in my opinion, either one you took, or even if you took something later in the PM session somewhere around here, or hopefully not anything in this, but if you took one of these trades, I don't think it's that bad. I think that it's actually a really great trade to take. And the reason that I didn't take this is because I didn't like this opportunity too much with the time. And then honestly, I just simply didn't like how close to open this was. And it's definitely things that we are journaling. Like when I go on and I review the day and I'm like, these are great opportunities and I didn't take them, they are things that I'm taking into account. And now from forever on, like I told you guys, this rule, once first presented gets opened up, in my opinion, that 9:30 manipulation chop session is over. Then you can take positions. I'm not trading until first presented for value gap gets opened up, period. That's me, right? So even if that loses me trades, wins me trades, it is going to be a trade filter that decreases my frequency. So in a lot of ways, it will preserve my win rate and it will decrease the amount of bullshit trades I take and just purify the great ones. So it's about things like this, just going through and being super aware of yourself and your own trading abilities and being able to recognize, okay, what is actually something that's holding me back? What kind of rule or system change could I have made today that would have actually guaranteed me to be able to take a banger trade like this one? So it's things like that, right? And once we kind of become super self-aware, we're able to realize those things and take advantage of them and change them within ourselves. And once we can look at things objectively and not be like, bro, no way I missed that setup, dude. Like, oh my gosh, like I'm so pressed about that. Once we can remove that and start thinking objectively, okay, I didn't do this because I saw this. Okay, that was my problem. Why did I see this, right? You are not the market. You are not your trades. You are just how you think about this stuff, right? So when I say I thought it was too close to open. Why do you think it was too close to open? Because of that chop session. Okay, what do I need to know when the chop session is over? Why did this trade work out where other trades maybe fail? Because first presented got opened up, right? So it's simply just going down the loophole, asking why until you completely exhaust it and figure out the root cause of the problems. If you've heard that thing where they're like, ask someone why 5 times and you'll get the real one on the 5th one, like it's literally exactly that. You'll get the real answer why. So for me, it was because I didn't know this chop session was over and I wasn't confident taking it. But overall, trade was great and it banged. So it's something to learn from, for sure. It is something to learn from. So thank you all for watching. I'm super thankful that you guys were able to watch this video and learn something. If you have any questions, drop in the comments. If you want to learn the way I trade, want to learn the way I think on the charts, if you want to go look at any of my nuggets of information on the way that I trade and see the markets, go ahead, check out my YouTube channel. I have tons of videos on a ton of different stuff. So thank you all for watching. I hope you guys learned something from this video. Drop comments if you have any questions. I'm going to let you boys go. So peace out.